Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Hello everyone, checking in on oil and USO. So oil was normal healthy consolidation to a point, but this last hourly candlestick putting the bears more firmly in control, so we set a lower high, and as soon as we broke the low of this consolidation of 48.70, we then had a lower high and a lower low, and it was followed by 4 red hours in a row. So that was a potential bear signal or a signal for the bulls to take some profit, and now we see the momentum heading to the downside. We're heading into tomorrow with an inside candlestick on the daily time frame showing that tightening range, but obviously we're much closer to a bear break because we are down at the low, and that's obviously a much closer move to see a bear break than it would be to see a bull break. So support from here going forward, looking at the hourly time frame, it's the low of last consolidation, and actually would be looking at resistance first. Previous resistance was 48.19, so that will be now a support level that we keep an eye on, and then I'd be looking at 48.05. And I'm looking at these resistance levels rather than support levels because it's so far to the downside before we see support. And this big red candlestick, the bears are having an easy time dumping down here because we didn't establish support on the way up on this candlestick. We just shot to the upside. So now it's just as easy for the bears to come back down. So we are seeing a pullback, and the major support that the bulls need to hold is 47.33. We have a lot of wiggle room before that level is tested. Inventory report tomorrow is going to have a major impact on how this inside candlestick breaks, although it will likely break before we get to that inventory report tomorrow. So if it's a bullish inventory report, we're going to be looking up at resistance of 49.35 and 49.63. And if it's a bearish reaction to the inventory report, it's 47.33. USO on the daily time frame, seeing this pullback. There's a gap to the downside at 998, and it's still healthy consolidation. You can see we had a similar consolidation and then saw continuation, but the difference was we had a nice lower wick with bulls buying the dip, whereas here we ended the day with momentum to the downside. So we're looking at the potential for a gap fill of 998 if we do see a bearish reaction to this inventory report. Keeping in mind, we're just seeing an oversold bounce at this point, and the downtrend is intact of lower highs and lower lows on this daily time frame. The weekly time frame is also seeing this weakness. Bullish reversal candlestick last week trying to be confirmed, but seeing weakness rejecting from the exponential resistances. So the bulls have proving to do, and looking at the daily time frame for oil just to get a more clear perspective on everything, we do have this oversold bounce playing out. We are anticipating lower highs, and I'm watching the longer term macro vision here of the weekly time frame. And let's get rid of all these horizontal lines that I just drew, but it's the pennant that I'm watching here, the triangle pattern. We've got our higher lows hitting 4 times, holding support, that's valid, and resistance getting hit a bunch as well. Range tightening, we could stay within this range for another 6 weeks for all we know, but we're going to be watching for a break of this tightening pattern. Lower highs, higher lows, playing out over the last, about 5-6 months at this point. And looking, you can see here, the follow-through for the bulls is very weak at this point. We need a bullish reaction to the inventory report to eliminate this upper wick and see a nice, strong confirmation candlestick by the end of this week. So I appreciate you watching. The bears have momentum right now. Need that bullish catalyst on the inventory report to turn things around. Otherwise, this is a very weak bounce attempt. As if it's a bearish reaction, we're going to see all upper wick on this weekly time frame. So thanks again. We'll check back in tomorrow as always, and we'll see you soon.